The Federal Reserve's decision to cut a key interest rate by half a point surprised a lot of analysts who see it as very aggressive by the central bank. But what impact will this have on you, the consumer? Well, for starters, it means you could get slightly lower rates on your credit cards, your auto loans, your mortgage rates, which have already been on the decline as we anticipated a rate cut. In fact, we are learning that more people applied for mortgages leading up to the rate cut. Total mortgage applications nationwide shot up more than 14% last week compared to the week before. Joining us live to talk about all of this is Stephen Bourassa, professor and real estate expert from the University of Washington. Thanks so much for joining us today.
Nice to be here.
Okay, let's start with what does this cut really mean, especially locally for people who've been hoping and wishing to get into the market. Is this a good time to buy with the rate cut by half a point?
Well, the rate cut has pretty much been already built into mortgage interest rates. We've seen rates drop over 1% since May, when they were at their peak earlier this year, and over half a percent since the beginning of August already. So it appears that this rate cut was anticipated and has already been built into mortgage interest rates. We saw another drop this week, just announced by Freddie Mac. Still, the rates are high compared to what they were 3 years ago. 3 years ago, we were talking about less than 3%. Now we're still above 6%, so more than double what we were experiencing then. So it's still seeming probably kind of expensive for a lot of people. And even though one thing that we've noticed is that there are a lot more listings than there used to be a year ago. Just last month in King County, for example, the number of listings was 40% higher than a year earlier. But the number of transactions has not changed. So we're not seeing more houses being bought and sold
Interesting.
yet. Maybe we will see that.
Is affordability the key? Is that the issue?
It could well be. It could well be. Prices are still going up. We've seen a significant drop in affordability in Washington State as a whole, and in King County in particular. And it may be that we need to reverse that to some extent, if that's possible, before we see the number of transactions going up. So people may be listing houses, but they may not be affordable to the people who are looking to buy.
So I guess the bottom line is a lot of people who've been wanting to get into the housing market, who've been scared away because the prices of a home are so high, rent has been so high, they can't save any money for the down payment. Is this a significant move? Is it going to matter for them, or do rates need to come down more?
I think they need to come down more. I don't think this is going to make a huge difference, to be honest.
But at least it's going the right direction.
That's correct, Ed. That's correct. And like I said, it's good that we're seeing more listings. That's a positive movement.
Which means
because a lot of people have low interest rate mortgages now and have been reluctant to sell their houses and trade their mortgages for a more expensive version. So that's a positive sign.
We're going to have you back, Mr. Bourassa, to talk more about this, especially if we see potentially in the months ahead another interest rate cut. Thank you so much for your time from the University of Washington, our real estate expert tonight. Thank you.